Hi Brendan, thanks for coming to see me. And hello everyone, I'm Martin Skinner, CEO of Inspired Asset Management and Inspired Homes. We are having a quick chat about the post-Brexit environment. Brendan's asked me to give my view on what the market's like now that we're Brexiting. I wasn't a supporter of Brexit, by the way. I thought we should remain, but it is what it is, and we've all got to get on with our business. I guess the three main areas that are significant for me, areas of concern and potential interest, are funding, unit sales, and acquisitions. The funding side has been mixed, I would say. Immediately post-Brexit, we were actually lucky. We did raise some money right after Brexit, but we then saw a drop-off in small pot capital raising. Bigger pot capital raising has been continuing with an awful lot of interest from big investors. So I haven't seen any drop-off there. Debt, there has definitely been on a couple of our projects, a £20 million development finance facility and a £60 million development finance facility. Both of our proposed lenders actually lost their lenders immediately after the referendum result. One of them, however, recovered their lender, so that should actually complete in the next few days. The other one, they've had to replace their funder, so we've had a delay in extra interest that we've had to service on two projects. However, the good news is that they've been replaced, so there's still definitely a very strong market out there for acquisition funding and development funding, but it takes longer and more work needs to go into arranging each of the facilities. Capital raising for equity, there's been less impact there, and I would say it's rebounded very strongly in the last 3 or 4 weeks. So if anything, we've had more demand from equity investors after the initial drop post-Brexit. So capital raising, I think partly as a result of the lack of return from other areas relative to the positive returns that are expected in residential in particular, in property. So that area is very strong. And unit sales has been equally interesting in that we did have a drop-off. We'd been selling so many units before the referendum. We were selling typically about 40 apartments a month. Post-stamp duty, post-Brexit, we dropped significantly down to, we sold 5 apartments in 5 weeks. So that was quite a big drop. However, after that 5-week period, we jumped back up to 9 apartments a week, 5 and 6. I'm not sure what the most recent weeks have been, but it's been extremely busy. Other house builders actually have been reporting that outside prime central London, which we don't do either, demand's been very strong, and in some cases outstripping last year's sales at the same period of the year. So I'm very confident on unit sales. We haven't dropped prices at all. We're actually looking to push prices up in a number of our schemes. So they're the funding side and the unit sales side. Rental demand, flip side to sales, has also been very strong. We've been letting our apartments, our sort of micro or compact 1-beds, for as much, in many cases, as much larger apartments from traditional apartment developers. And we're in the seasonal upswing now, so there's a huge amount of tenant demand coming through. Unit sales typically picks up quite dramatically in the autumn, so it'll be interesting to see how that goes in the usual selling season, because you've got to bear in mind it has been summer. Generally people are bobbing around in the Mediterranean at this time, so not a lot happens in the property market in the summer. The other side of things is the sort of third aspect is site acquisitions, and commercial property prices or values have definitely been hit to a sort of 10-15% extent, I would say. We haven't seen a lot of really motivated sellers. Some of the listed property funds have sold some stock. Unfortunately, demand has been very strong for it, so we haven't been able to pick up any of those sites just as yet. But I think a bit more reality has come into that market in pricing. In office to resi PD opportunities, it was getting quite overheated, and we've been struggling to buy since we bought our last site in February, just because people were paying silly money for sites. So we're very hopeful that we'll be able to pick up some good deals again now. A bit of the steam's been taken out of the market. So I think, although I didn't support Brexit, I would have rathered we remained. Actually, this could really play to our advantage in that we're still raising money and selling flats very well, and we should be able to get better deals on the actual raw material, the office to resi sites that we want to buy. So I hope you are all having similarly pretty positive results, and look forward to meeting many more of you in the near future at different events, particularly Brendan's. Thank you.